I just really wanted some formal training. So um, not to get, so much on the personal side, but I knew somebody at Morgan Stanley, and he got me a job there to, be an analyst, and I found it very beneficial. And everything I do, you'll see I have a methodology. It's called the five-stool model, and everything I do is based upon what, like, fundamental analysis part of the five-stool model. So with that, I'm going to go, and are we showing my screen now? Hello? Hello?
Yes.
Hello?
Yes, we have your
My
screen.
screen shown?
Yep.
Okay, thank you. So one of the things that I found out in terms of trading is that everybody has a different style, and you really need to figure out what your weaknesses are and what your strengths are, what your capital limitations are, and make a decision, based upon your own situation, how you're going to trade the market. So obviously we know a day trader, you're going to capitalize on the intraday moves. I do that a lot in terms of just capturing like little scalps, like today, McGraw-Hill and Moody's. I thought they were pretty much overdone, and I was looking to scalp along out of them. And how did I decide that? I was looking at the charts, and there were certain moving averages that weren't really being penetrated, and so I thought that there was a good probability that we might get a little bit of a bounce on that. So that's an example of a day trade that I've just recently done. And even like Fossil was supposed to just be a big day trade because I don't know as much fundamentally about the company as I do with some of my swing trades, which would be, I think that, to be honest with you, I think that my intraday or my day trading moves kind of turn out to be swing trades if they're right, because like, for example, BMW, that was not something that I was looking to swing trade, and it's just been a very good kind of swing trade. I know what the levels are, I see what they are, and I know where my stops are. So until that stop is violated, I'm not going to, I'm going to let my gains run. And then there were a couple others that I just played as a scalp, like Coinstar, which was horrible, horrible, horrible. But, after I listened to the conference call and I understood the company more, I really felt inclined to hold the stock, and I added to the stock, which everybody knows you're not supposed to add to a loser, but I just felt like I was a little early and I should have done more due diligence before I actually placed myself into that trade on an earnings. But after I did do my due diligence and I did look at it and I did listen to the call and I was watching the price action, I saw that the after-hour post-earnings level that it hit wasn't being violated. And that's really my stop. And I did add to it. And today it actually got the 49s. And I think that it's working its way to a very nice, maybe I should try to view it too with you, because that might give you a little bit more depth. Where is it? Where's Coinstar? Oh, here it is. So, if you look at the chart on the drop, this kind of held, right? That was 48.71. and then it came down and it tested the 46. Where was the 46? Because I know it was 46s or something that it went to. I can't see it because this thing is in my undock control panel from screen. Maybe I can just move it. Yeah, I'll just move it down here somewhere. By the way, this is TradeStation. This is not the platform that I trade off of, but it's something that I've used in the past to do webinars on. So I thought, you know, it doesn't have my model on it, and it could give me a little bit of a, you know, you guys a little more breadth of what I'm doing. But anyway, so it's been like holding that 47, 46 level. And is it here? I don't know. For some reason, because these are closing. Let me see on a 24. Yeah. So here, where's my tools? Anyway, so around here, right here, see this? That was 46.81. That was the stop that I put for myself. If it got below that, then I was going to get out. And that was even that day because it came down and then it went up and it tried to test it again, and then it's been just chugging along. And I really like it after listening to the call. I was early, but I can do some mending of my stocks because I wasn't that heavy going into it, and I think that I have a stop, so I know what my risk is. And I think that's something that's really important. Like when you get into a position, you have to know pretty much where you're going to stop. And sometimes it's not always defined because there's other information that becomes part of, you know, your tool set. And so it kind of is dynamic. But there should be, I mean, a pretty hard stop. And that's my stop. You know, like I wanted to see where it just kind of settled. And if it would go lower, I would not add to that position whatsoever. I'd just take the loss. Just like I've said to you guys in the room, I would just take the loss because it's too early. Regardless of the fundamentals and the call, I would just take the loss. So then, I don't know. Oh, here's the thing I was looking for. Right here. That was what I was looking for. And as you can see, it's doing pretty good. You know, it's coming up. It's kind of, yeah, it's just kind of consolidating, you know, and I like the fact that it broke through this area, the 49.30 area. Now it needs to really, really kind of get a little bit more volume in it, because if you look at the volume, I mean, it's still pretty null, you know. It's not a lot. So, I mean, it's just one of those trades that's going to take time, or I'm going to end up being wrong. One of the two. So let me go back to, how come I can't get out of here? Okay. Wait, why is this doing this? Now I can't get, Chris, I can't get back to the other screen. Why is that? Maybe escape? Okay, yeah, there you go. So then, as you know, fundamental trader, I definitely do what an analyst does. I look at how they reported last quarter. I listen to the quarter before conference call. I look at how the stock trades after the conference call, and I look at how it trades between the time that it reported its last earnings and this earnings, and I try to get an idea of like what the overall price range is and kind of where the VPOC is, and I try to get just a sense of the technicals, and then I also look at the debt to equity ratios, what they're doing with their margins, what kind of product launches they're doing, what their debt to equity ratio is, and then all that stuff I try to use to come up with a thesis of what potentially we could see in the stock in the quarter that we're presently looking at. So this is pretty much just our style, and like I said in the beginning, each one of these methods or styles, they work, but the thing is, you have to, as an individual, understand what your own risk tolerance is, what your capital requirements are, and what your max pain really you're comfortable with. Like today, I was trying to let you guys know, because I don't think I'm always that clear about what I'm doing in terms of my positions. Like, even though I'm bullish on Amazon long term, the thing is, the stocks don't go straight up. So there's going to be fluctuation in the stocks. And you can, if you're a day trader, you can capitalize on those gains. I personally, my job, and I feel this way because you are looking at me for guidance, I'm not going to tell you, oh, I'm long this stock and I think it's a long and you're silly for shorting it. If it's not getting the certain, if it's not holding the certain levels, then yeah, go ahead and shoot me, take a shot. I don't care. Take a shot at me, bang, bang, but I just have a different duration, and I wanted to make that clear today, because I was saying to myself, geez, I don't think that they realize that I don't have a problem with people capitalizing on the intraday, price swings of my positions. But if you look at most of the positions that I hold, they have been fundamentally more of a long than a short on a holding type of basis. But my time frame and my duration and my holding period is much, may be much different than all of yours, and I'm sure it is. I just don't have the flexibility to go in and out of things as quickly as some traders do. So let's move to the next screen. I look at a lot to get a big picture. Actually, I think I'm going to go here because this is kind of
Madison?
yeah.
Oh, there we go. You had the go-to meeting thing was kind of in the middle of the page. I couldn't see. So
Hold on a second.
like
Yeah, because I wanted to go to this.
Great.
So here's kind of the nuts and bolts of what my model is based upon. It's about the macro and the economic risk. So I look from more of a top-down approach when it comes to the overall market. I want to know what the probability of high beta stocks being able to actually continue the trend. And the way that I found, for me, that works is getting an idea of what the overall market is doing and what it could possibly do and what the potential headwinds are for the market. So there's a lot of ways to evaluate the market risk. Like, you have your breadth and the liquidity, you have your market trending up and down and sideways, and it churns, and like right now, we're in a period where everybody wants a pullback, right? Everybody wants a pullback. I even think that we're at levels that we should see a pullback. But if you look at the, where is it? Hold on. If you look here, we have this top. We have this is 2000. Here's 2008. And now we're at the point where we're getting really close. Based upon my experience, I think it would be very, very interesting if we didn't go and at least break through 152s and 153s. And then you say, okay, well, Madison, then why do you keep on hedging your longs with a SPY short? Well, because I am really not anticipating that it's going to be a layup. It's going to be something that's a shock. And nobody's going to be, markets just don't say, okay, here, we're going to go to 155 and then boom, that's the time to sell it. Based upon my experience, I've never seen that happen. And I don't think it will happen, but I definitely realize that, what my upside risk is. And I also believe that if we can break out through this level here, which is 155.75, we're going to go and we're going to get, we're going to break out to another range. And I don't know what's going to happen. I can just see what I can only trade and do what I feel that is most prudent for what price is telling me. So that's why I've hedged, because I'm pretty much, I have a lot of longs on. I have a lot of shorts on, but in terms of my longs, I'm much heavier. And if this market just surprises us and it just one day I wake up and the Dow is down 300 points and, I don't know, S&P is down 18 or 20, I'm dead. Like, if I'm not hedged, I'm dead. I'm dead. So that's why I hedge my positions.
Madison,
Yes.
in a more general sense, what type of trades do you tend to focus on? Breakout trades, support trades, and would you say that they're mostly swing trades, as you had mentioned before? Although if they're losers, they can be day trades because they didn't perform.
I do more swing trades. I mean, I'm more of a position trader and a directional trader than a breakout trader. I mean, Schmitty's a breakout trader. That's why he's a very good asset to our room. I don't know if he's here. I hate to say nice things about him because he's a pain in my neck, but no, he's really good. He's a very good friend of mine too. But he, he's more of a breakout trader. He's looking at where the volume picks up at certain levels, MA levels, etc. So that's not really what my forte is. I think there's a way to make money, but from my perspective, I've always been able to capture more of the upside, just like LinkedIn. I mean, I've been in that stock for a long time, and that stock was based upon fundamentals. I had seen what the quarter before had done, and I saw like how it reacted within the time frame, the period between the earnings dates, and it hasn't violated any of the rules that I have to make me say it's a short. And if I would have just been looking for breakout trades, which I can identify, I would have missed out on a huge, huge win. but that's my style. Can I tell you guys, oh, this is, look, I'm looking at this for a scalp? Yeah, just like today. I said, you know, I thought that Moody's and Graw Hill were overdone, and it turned out that they had a little bit of a nice, you know, they had some nice performance today. And Fossil, who knows what's going to happen with Fossil? I mean, it had a nice little breakout today. Does it continue into earnings tomorrow? I don't know. But if you would have played that today, you would have made a nice little chunk of change. Apple to me was fundamentally, I like Apple. I've always liked Apple, but things have changed in the company. And I don't know whether or not I really trust Tim Cook. I think that what he's done to the stock, let it go from 700 all the way down to 438, is just ludicrous. A company that is as strong and cash rich as Apple should not be going, you know, not be seeing that type of a breakage in price. It's just, it's ludicrous to me. Absolutely ludicrous. But anyway, so that's part of the idiosyncratic risk. This is the idiosyncratic risk. So I look at the macro, try to get a big picture of like where everything is. You know, what are the risks? Like macro in terms of global and domestic. Like, why did I call the short on SPY before with the election with Obama? I had a thesis. You know, I saw how he was in terms of his campaigning, and I just felt like, look, it's going to be his way or the highway, and I didn't like the whole election process, and I don't know, I just detected something in him that he was not going to really be a team player. And I said, you know what, if he gets elected, this market's going to crash. And I posted that everywhere. Everybody knew it. And, you know, my friends from the street, from like Highbridge and Goldman, they said, are you crazy? Like, I was like, no, I'm telling you, it's, if Obama gets elected, the market's going to tank. And what happened? And it did, you know. So, I mean, but I think about it. Like, I think about it. You know, I think about it. And I definitely do believe that we're going to have a major correction by the end of 2013. It's going to be something that happens where I don't know what it's going to be. It might be in March, it might be in May. I don't know. But I do see something happening to give us a nice correction. And it might be, well, I was talking to Pensions Partners the other day on this stream, and he feels the same way, but he's not really able, I mean, nobody's able to quantify it, but a lot of people I know feel that same way, and it's not, they're more macro, right? They're not traders, they're macro people. And you know, I originally thought that it'd be a downgrade. I thought we get downgraded by Moody's, but look what's happening with all the rating agencies. They're all being sued, and you know, so I don't know if that's really going to be it, but that's something that is a possibility. I'm kind of getting sidetracked, so I'm sorry. And then there's operational risks. Like, you know, you look at what the market makers doing and where they pause the levels. Like, here's a classic one. Here's like FaceBarf, right? On the IPO, what did they do? They held 38, held 38, held 38. Then they tried to like rip it up, and they were not going to let it go past 38. That's an example of the market maker actually holding a price, or the syndicate, or whatever you want to call it, because it was an IPO. But that's an example of where is the price being paused at. And that's what the tweezers are. It's like, okay, this is the price where we're pausing. And if you can look at it, which I think, what was the good one today that had 2 pauses? The tweezers? Maybe Spy. Spy has a lot of tweezers in it. Oh no, let's do Sprint. Sprint has the best example ever. I have it, but I'll just add it so I don't have to look for it. Look at all these tweezers. Like, look at that's market maker. That's operational risk right there. It's like there's no way they're going to let it get through there. I mean, how many times did it try to get through that level? How many times, right? And this is what I'm looking for in order to continue with my thesis, right? Look at that. There's one here again. You know, like they just keep on holding these prices, and every single time it holds, it goes up, and then it tests it, and then it goes up, and then it makes a higher low, and then it goes up, and then it comes back. I mean, it's just pain in the neck. And the same thing with this, you know. And I like this right here. I think it's going to go higher. I'm looking for $6, which if you, oops. Wait, what is this over here? I think this is the $6. I think that's where it was in terms of, yeah, hit $6. But if it can go above that, I think we can start grinding a little bit higher. I mean, it doesn't look that great on the weekly, but it's spacing, you know. So who knows? It could go either way. But I like it. And I think that so far it's performing relatively well, for me at least. Okay. And then the technical risk, you know, I look at the moving averages. Which moving averages do I look at? I look at the 8, the 21, I look at the 50-day, I look at the 100-day, and I look at the 150, and I know where the 200 is. But I usually look for the 8-day being like holding the 8-day. And if it breaks above the 8-day, then there's your breakout. You know, you're looking at, okay, for the last 8 days, the stock's volumes continuing to be higher, and the price is going up with increase in volume. Okay, there you go. You could see it. And then I also look at the Fibonacci's and how close they're trading to the Fibonacci levels. And like, for example, I think I posted on Facebook that, I'm sorry, I keep on saying it. Oh, wait. There's a question. Yes, Phil, I do. On tweezers, yes. I do look for volume patterns to coincide. Like, I want to see whether or not the volume was I guess like what I want to see is when it hits that next price level, is the volume more or less when it stops it or it pauses at that level. And if I see that there was more volume coming in at that level, I think it has more of a chance to go higher than, like, say, for example, let's just make a hypothetical story. Say, you know, Facebook hits sorry, I love $10. Say $20, right? And it's on a volume, let's just say hypothetically 100,000, and it's supported there. And then it tries to go up. It can't really get much past, say, 2050. And then it comes back to retest it, and it pauses there. But instead of 100,000 shares, say it's 300 or 200,000, just like bam, it like hits it and bounces off of it. And then to me, that says to me, well, that support right there was better than the support before, so it should make a higher high. You know, from like, instead of going to 2050, I should be able to see it at least go to like 2055 or 2054. So does that answer your question, Bill? Okay. Does it?
Yeah, he said yes.
Thank you. Okay, thank you. I'm looking at the Chatsy as I'm speaking. I wasn't before, but then I saw that question. So if you have questions, definitely put it over there because I'm watching it. So then I also have here's my RSI. I look at the RSI and the MACD, and I try to find out like whether it's curling up, what the volume is, what the trend is. You know, it's the same thing as everybody else does. I don't think there's any really special thing there. This is just more macro stuff that I look at. So let me go what else. I mean, I don't know really what you guys want to know. I mean, so you guys can ask me whatever you want to ask me. And then let me see what else we have. Oh, so the market internals for me to get an idea of how things are going in terms of the market. I actually do a lot of this. I look at, you know, the advanced decline ratios. I look at the put-call ratios. I'm looking for the down market, like the level of interest for put-call ratio would be like 0.75 to like 1.2. And then for an up market, I'd like to see that stay between like 0.35 and 0.75. And I also like to look at the buy-sell volume on the NYSE, and I like to see it above 3. So that would mean that there's 3 buy orders for every 1 sell order. If I think that the market should continue to trend higher, I also look at tick a lot. I mean, if you look at my monitor, the way I have it set up is I have tick, and then I have my quote screen, then I have my charts, and then I have the tape. This is the way I trade. And on my other, on my other screen, which I can't show, I have, oops, what happened?
Hey, Madison.
Yeah.
What system?
Yes?
What station or what platform do you normally use?
Actually, it's a proprietary model that is issued. It's through JP Morgan.
Ah, okay.
Because I clear through JP Morgan. And so it's one of their systems.
Okay. One other quick question was popped up was about the volume that you would want to see in a stock. How little? What's the lower threshold of say volume traded that you would be interested or willing to trade as far as getting involved in a new
In
stock?
terms of what? In terms of what type of stock?
Daily volume. I mean, is it a
For
million?
what? A small cap, a mid cap, a large cap? What?
That's not clear.
Well, it kind of depends upon.
Okay.
I mean, I would say I would look at the percentage of gain of the volume. Like if I see like 2 to 5% increase in like a small stock, that would be pretty significant. Like I think on even in the options market, if I see, I think was it LUV the other day, it was trading like the calls were trading like 3 times the amount of the average, like the March, I think it was March 16 calls, were trading 3 times the daily average. I thought that was pretty significant. I don't know what it did today because I didn't really look at it, but that's something that I would look at and say, there's something going on. Like, I mean, if you look at Sprint, I mean, geez Louise, that volume has picked up so much since it's got above uh, 5. Like, look at how much it's traded. You used to see that at like maybe 800,000, maybe maybe 2 million, something like that. Like, I mean, it wasn't really traded a lot. Now there's interest in it. And for me, that's what I want to see is I want to see more and more volume pour into the stock, if I'm long, more and more volume pour into the stock at levels, at higher levels. Does that answer the question?
Indirectly, I
Does
think.
that answer the question?
Yes.
Okay. Okay. And then here's the Fibonacci. This is part of the technical tools just that I look at. Like I said, I look at fundamental, I look at macro, I look at idiosyncratic, I look at operational, and I look at technical. And these are the technicals. I look at the Fibonacci's, I look at the RSI, I look at the MACD. I also throw up Andrew's pitchforks once in a while just to see what the channel is, where the price is changing based upon the upper median and the median and the lower median. And I like to see whether or not the price channels are tighter than like the fib levels, like where they are in terms of the fib levels. And just that, I use that to manage my positions, not so much as getting, I mean, you could use it, I guess you could use it to look for an entry point, but I usually use it more for managing my positions. And I look at, I like, for the fibs, I really like the 38.2%, and I like the 61, and I like the 100. And I think, what is it? That's one of the stocks that I'm recently looking at. It's like way above 100%, and it looks like it's going to have a good pullback coming soon. And I would expect it to try to trend towards that, and then I'll evaluate how close it gets, what the volume's looking, what the price is, what the sentiment in the stock is, etc.
What about Bollinger Bands? You ever use those?
I do, but technicals for me are just, I mean, I have them and I look at them and I see where they are, but I'm not as much of a momentum trader. So if something's like closing in on the top of the Bollinger Band, then I would expect a little bit of a price pullback, and especially if the volume is like um, confirming it. But for me, that's not something where I would say, oh, okay, you know, we're touching the top of the Bollinger Band here, so I'm going to get out of, you know, my LinkedIn position or my IBM position or something like that. It's just a tool, and I do look at that for you guys. Like if I see something that's coming close to, you know, the upper end of the Bollinger, and I see that the price is coming in and volume's drying up or something like that, then I will definitely post it for the room. But for me, I personally would not change my position. And that's kind of like what I was trying to tell you in the beginning is I may be biased to a particular direction, but I also realize that a stock can go up and it can go down, and there's fluctuations in stocks, and there's ways to make money either way. And I mean, there are stocks that you guys don't even know that I'm in because I've been holding them since I started the fund, which was in 2009. And it's not something that I really, unless I add to it, and but then I still don't tell you. Like I wouldn't say, oh, I've been in Apple since, you know, the iPhone. I'm looking at Apple based upon what its price action is doing right now, so it doesn't distort my viewpoint of, you know, it doesn't, so my viewpoint or my bias on Apple isn't distorted and doesn't lead you guys into the wrong direction. Do you understand? Does that make sense?
Yes, yes, absolutely. Another question that came
Okay.
up was what percentage of a portfolio or of capital would you suggest that people put in a single idea?
Well, that's kind of a difficult question to ask because I don't know what type of capital they're playing with, right?
Okay, that's fair.
But I guess I could say if you're going to start like say the the say like the Sprint. Yeah, a starter position on something like that, like I would say, you know, 2% of your capital wouldn't be a bad start. And then you should have a stop and say you're not going to lose. You know, you're going to break even at the worst case scenario. And then if it continues to go up, then you add in increments like, you know, probably 1% or something like that. Like for me, one of my largest holdings, I mean, I have like a few that are really large holdings, and you guys really get most of what are my significant holdings because I know them the best and I trade them the best, and I know them, right? I know their price action. I know the levels. I know where pauses are in the thing. Well, I don't know for sure, but I have a good idea. But I feel very confident that I kind of know where the stock trades because I've been trading them for a long time. And so, like Coors, when it dipped below 55, I did not hesitate to buy more. Not even hesitate. And people would ask me on the stream, you know, like, well, it like it broke 55s and it went down to 52. I was like, it's a core position of mine. Like, it's a position of mine. I believe in the company. I believe that, you know, based upon where I got, like from where I got it, I'll add to it. Not because I believe that I couldn't be wrong, because obviously I could, but what I'm seeing right now in Coors, it's earnings like pre-earnings activity. The stock went up to 60, and then it started retreating. And to me, I don't know. I don't feel concerned yet. You know, same thing with spreads. It never broke our entry point of 525 or whatever. I don't know. 550, is that where you guys got in? A lot of people got in at 550, but it hasn't broken there. And then today we went back to the 580, and so I don't know. From my perspective, I believe that a stock is going to have fluctuations, and unless it really, really violates one of my model's parameters, I'm not touching it. Like, I'm going to go with it.
Do you see the question?
Did I answer?
Yes, yes. Do you see the question that was posted in the GoToMeeting about price action?
No.
Okay, I'll read it. It just says that, could you please talk about price action? What specifically are you observing? Example, are you talking about price staying within a range during a certain time frame?
Okay, so this is actually a good place where we are. So for me, I read the tape, and I really look at the bid ask, what the volume is on the bid ask, and I also look at what what type of volume is going off at those price points. So for example, say like I looked at face barf today, this is why I don't like this stock, because it's not showing me anything on the tape that makes me say, oh, come on, there's a good chance that it's going to blow through the levels that it needs to blow through to get up. Like if you look at this huge spike, what the heck? There's nothing there. There's nothing there. There's no volume there. It's air. I don't know how it even got placed. Maybe it was a bad trade. I don't know. But when I was looking over here, here's what you're looking for, right? This is price. Wait, how do I get this over here? And price never lies. Like, look at, do you think this 100 lots are like commitment? No. To me, like if I see, I don't know, 5,000 shares coming in at this price, like this looks a little bit better right here. This is not good color. But like, I mean, here you got, right here is pretty good right here. You have some decent buying volume there, right? But as soon as they take it up, somebody else whacks it. There's nothing, it's just, to me, I don't see any commitment. And I'm looking at it, and where are they being placed? There's no commitment to me. I don't see it. It just looks to me that it's going to continue to fall. It's going to find its level, just like when it went up. It's going to, and it went up on no volume. If you look at the trend in the volume on Facebook before the earnings release, there was no volume. It just went up on thin air. And that's why I said to short it, because I didn't see it. Obviously, the operational risk, which was the market maker risk, which, has to do with the options. Good night, John. That shows to me that there's Can you go over your linked trade? It was spectacular, right? Did you get and play it after hours? So anyway, so to me, that is what I'm looking for. I'm looking for the price to be consistent with the volume. I want to see commitment. I want to see commitment, and I want to see whether or not the price is getting filled at the bid or the ask, or if it's getting filled in between. These are things that I want to see in order to commit one way or the other. Like Amazon is really concerning me. It's really concerning me. Today's flow, price flow, you know, I think, look at this volume. There's nothing there. Nobody's committed. It's very concerning to me. As a, you know, somebody that's long, it's very concerning to me. You know, and the only time that it gets any volume is when it sells off. Everybody wants to short it. That's the whole thing. That's the problem. You know, it's the problem. So as somebody that's holding it, I have to be honest with you guys, and I have to say, look, you know, if it can't get over 262 and close over 262 and get through 264s, it has risk. It has risk on the downside. Anyway, what else? What was the other question? So here's how I select my stocks. So I have this short squeeze kind of methodology. Like when stock prices are trading there, it's 52-week high with a high short interest. I look, these are my kind of like my breakouts that I'll look for. With high short interest, they have a tendency for monster moves. So if I'm short that, I cover, right? And I let it go through its short squeeze. And then there's the whole fundamental argument that analysts do pay attention to price, and if price pattern is trending towards the 52-week high, an analyst is watching and they will upgrade the stock to the next like price level. To me, unless I personally think that the stock should get a price change, like I will look at it, but I don't necessarily, if I don't agree with it, I'll look to short it. I'll wait and see like for the next day and see how it trades, and then see whether or not the analyst upgrade really holds. So I'm kind of a contrarian like that. Okay, action, yeah, AJ. I agree. Chris and I were talking about that. To get some sort of like blog or something where you can see my current positions and what my thoughts are. I mean, I try, one of the things I do try is once a week minimum, which is usually at the end of the week, I try to, and I've been trying more daily to go over all my positions and define my price target and the levels and what I'm seeing on the action, you know, during the day on the price action, and I'll make a judgment, like I think it's okay. Like I say caution, or I say, you know, it's fine, or buy the dips above XYZ price. Like I've been trying to be more thoughtful about doing that for you all, and I've been posting it on TL Montana, and but I'm also going to be starting to post it on Matty Ion Spy, because I think what we're going to try to do is use Matty Ion Spy as the backup, because we all know that Chris and I, we know that you all have Twitter, and we're kind of thinking of whether or not we need a blog, or because I have Goog Plus, actually I do have Goog Plus, but if we should get a blog, or if we should get a LinkedIn account or a Facebook account, which I prefer not to be on Facebook, but I know people use it a lot. We can have like a closed group and people could look on that. I'm not really that familiar with the technology in terms of how easy it is to like do grafting and stuff like that on there. I don't even know if it exists.
Yeah, I don't think that LinkedIn, well, or I mean, in each of those cases, you would have to save the image and then post it afterward. Whereas in some of these systems, you can post a link and it'll show you the picture. But I'm not certain whether or not that's something that that LinkedIn has anyway. But the idea behind the Matty Ion Spy shift is that we would post far fewer things to Matty Ion Spy, but each one of them would be a relevant, trade idea, observation, or something that was very actionable. And the more the dialogue and kind of the free association of ideas that TL Montana does on Twitter would be a separate thing. And then of course the chat room would be active for question and answers and posting and others' ideas as well. So try to separate that a little bit so that there's not as much clutter and or self-promotion even on the Matty Ion Spy feed.
Yeah, I mean, the thing that I have to say is Chris and I have thought about what the chat room really should be. And for me, I'm still kind of toying with the idea because I don't really want a ton of people in chat. I want people that share and I can bounce ideas off. And there have been several people that we've asked to leave. We've refunded them and we've asked them to go just because they were very it was just I felt that I have a job to do, right? I have my own portfolio. I have the responsibility to you guys. And if there's one person that I think is just not even not seasoned or has no thing, but the thing is, if somebody asks me something, right? This is out. I'm gonna just come straight out and say, my biggest pet peeve is if I spend a lot of time with you, and you do a lot of DMing with me, because I have a lot of people that PM me throughout the day in the room, and they're asking me for entries and exits, or should I hold, or should I should I add, etc. Should I take cushion? If I'm spending that time with you, and you go against what I say, and it's consistently, it's just, and then you get upset with me about it, then it distracts me from helping everybody else. And I actually do feel responsible. I feel responsible. I mean, I know it's your trade, you're pulling the trigger, but I feel responsible, and I'll just give you a thing. I won't name names, but there was this person that was in the room, and I really wanted to help this person, really wanted to help her. And everything I told her to do, she would do, and she'd be making money. She'd be making money. And then all of a sudden, she'd DM me, and she'd say, MM, I'm losing money. I'm like, how are you losing money? Well, I didn't listen to you. I didn't get out. I didn't take cushion. Now I'm down. Well, and then she gives me a guilt trip. I don't have time for that. I'm sorry. I have 30 other people, 40 other people, plus people on Twitter, plus my own job, that I don't have time for that. I'm here to help, and I want to help, and I want to make you guys all, as a team, I want us all to make money. But if there's one person that continues to be a thorn in my side, I'll ask to leave. And that's one of the reasons why I don't have hundreds of people in my chat room. It's because I like to see what the fit is, right? Because you're just as much of an information source to me as I am to you. And that's how I feel. I mean, I learn a lot from you guys. What did you say, Johnny? I'm only a day trader, and when 90% of you are in swings, it's to get more. So, Johnny, up here, there's a SPY levels, and that is usually gets updated every single day. And I think what we need to do, because this morning, if we go back, I can't do it because you can't see my screen. But wait. Oh, that's a good question, Michael. Let me just finish one thought. So if you go back in the morning, I said I was looking for long scalps in Moody's and in McGraw-Hill. Because, I mean, I saw some action coming in the options market, and I also thought, based upon where it was in terms of the chart, the technicals, it was ready to have a little bit of a bounce, whether it be dead cat bounce or whatever, it was going to have a bounce. And so I posted it in the morning, and it ended up, I think it was like around 9:30 I posted it. CP, if you can go into review mode and look at 9:30 area, and if you can bring it up on the screen, then you can and just show it. Because the thing is, we need to definitely, a lot of stuff gets lost because everybody's posted. And I don't mind that because I like to have a lot of participation. So then anyway, so then here's where then the other thing I look at is I look at stocks trading at support bouncing twice off, which is the tweezers, and makes a higher low or breaks support. And if it breaks support just by a little bit, like say 50 cents, or like for example, I'll be looking at Facebook tomorrow, and I'm going to see, okay, we know that 2801 was a significant level, right? It's the same as SPY at 149.01. So if it just comes down and it breaks it by like, 85, it goes down to like 27.85, and then you see volume coming in there, then to me it might be a good little day trading thing, like a little scalp. I mean, you might be able to scalp like 40 or 50 cents on that
Maddie?
trade. Yeah.
I'm at this area of 9:30 this morning in the chat. What is it you're looking for?
It just says, I said MCO and McGraw-Hill,
Oh, yeah.
HP.
Yep.
Yeah.
Looking for a long scalp right there, yeah, at 9:34.
Yeah.
Okay.
So if you can just put it on your screen and, switch your screen to my screen, to your screen.
See it?
Yeah. That's it. So it was 9:33.
Yeah. That was good.
So, I mean, the thing is, there's information there, and this may not be the best way to disseminate the information because everybody comes in and out at different times.
Right. See, this is
So,
where I think the Maddie Ion Spy Twitter feed could have a few of those comments in the morning as your kind of thoughts that you're getting ready. Send them over there where they're.
but even if you look at like 9:30, I said LinkedIn 152 or 149, right?
Yep. Yep.
So, I mean, these are things that I was thinking ahead of before the market even thing, and then I said ugly gold week, you know, like
Right.
these are things that you guys won't catch unless you've read through it and you've been here and you're hearing everything I say, you know.
That's true.
But you can scroll back.
Yep. No, you can. In fact, that's what the way I was rendering this is if you go to this portion, which I can show you, you just scroll up to the very top, click that bar, and you can go back, you know, to a page back, and now we're looking at the 10:30 to what about 2 or so, maybe 3, almost to the close there. That you get that chunk of history, and you can go back, as you can see on here. I mean, we have weeks of chat as well for those inclined to go through and see how you know what data is presented each morning, and you can see that it's not tied together in a knot, but it is available. I'll kick it back over to you.
Okay, so it's on my screen.
Yep, should be. There you go.
And then, I mean, for the people that are more of a scalper, I mean, the things that I also like to look at is like the Coinstar trade. I like to see, like I use short squeeze sometimes. I look Venviz. I look at that to see, you know, what the short entrance is, and if I see some volume picking up in the stock, and you know, there's some sort of good news on the stock, I like to look at that. I'll play that, you know, and that's like I get a lot of that out of short squeeze. I also use MarketSmet, which I've found as, you know, pretty good. I have my own charting system, but I use that to just look at certain things. And there's this thing that I call on a tape. It's a waterfall. I call it the waterfall. It's like steady price flow plus strong volume. So the direction is being confirmed. That's what I was talking to you about earlier about face bar. There is a waterfall, but it's a steady price down, and the volume as when it loses. What I've seen is like when it loses the 50-60 level, then it just like you just get a tremendous amount of downward pressure in the stock, and then it goes from like 60 down to 20, and then it tries to catch a bid there, and then, you know, there's not a lot of confirmation, and then they play with it and consolidate. And so, like, for me, Facebook is a great directional trade for me because I know where my stop is on the upside. And as long as my stop is in, I can continue to short the rips. Same thing with, you know, Green Mountain. That was another, it was just going to be like a day trade. And it ended up to be like a swing trade because it's not really getting the volume on the upside that it needs to be able to push through the levels that I post on, you know, in chat. And those levels are serious levels. I mean, I never told you this, but I actually co-authored a book. It was called Market Games, and it was with my professor at NYU, and he's actually well known. He's on Bloomberg a lot, and not so much anymore CNBC, but he used to be but we did this market games because my major was math in college, and I also took finance and economics. I didn't tell you that, but that's what my majors were. I had math with finance with a minor in economics. So that's kind of where my head is, um, and that's how I think. But one of the things that my model captures is the volatility within the moving average, like the moving averages of price. And it also takes into account like what you guys would consider the overbought, oversold levels of the Bollingers. So it's a mathematical formula that he was like a doctorate of, he has a PhD in mathematics, and one of my very good friends that worked at Morgan Stanley also worked on it. And so we created this model, and we had used it to train other people, like junior traders at large brokerage houses, using this model. And we did a whole, I think it was like a month and a half background of just teaching the fundamentals and understanding the different stools and going through all the charting and the techniques, and making them really understand the basics that go in to create this model. And it was fairly successful. I mean, we trained people at Goldman, we trained people at UBS, we trained people at Credit Suisse. I mean, I still have some of the people that I've trained are still, and they're still on the street. Like, there are people at Merrill Lynch BAC now. I think there's a guy at Highbridge. I know that there was a guy at Piqua. I don't know where he went. There was a guy at Moore Capital. There was a girl that was working at a small prop desk. I mean, we've had a lot of success. And, I mean, I could do that, but I just don't have the time to devote that, because, I mean, you have to go through like 4 to 6 weeks of really, really understanding the model. And then what we did was we had simulation training, and then you would use that, and then based upon that, we give them a book. Well, we wouldn't, but their brokerage company would give them a book. And then at the end of the day, the people that did the best were the ones that got hired, and they were the ones that, got increases in their book. But, so, I don't know how I got off on that tangent. But anyway, to throw an example and the significance of them, please. Can you, SB, can you clarify that? It says, I never understand these higher low and lower highs. Would you throw an example and the significance of them, please? Oh, I meant to the candles. Okay, let me see what's a good chart. Okay, let's look at Baidu. So actually, Baidu looks like it might be consolidating for, right, to me, it looks like it might be consolidating for like a push higher, because it tested, here's the low, here's the low, there, and then over here, that's a new low, by the way. Wow, that's a new low. Because here's the second low, the prior low, and here's this low. So here, this is actually, wow, I don't even know how I came across this. But this is great because here you have a low here, right? And then it makes a lower low. And now, is that a lower low? Let me see something. Where's my... and then here, is this lower here? I don't know where the little ruler thing is, but there's supposed to be a ruler here. I don't know if this is, no, this is a lower low. So you got a low, you got a lower low, and now you got a lower low. That's what I'm talking about. Let me just make sure that's true though. 95, 91, 95, 61, and 95.47. Yes, so you're getting lower lows, but you're not getting higher highs. So like for a higher high, we would look at well, let's look at this because it was doing that. Let me see if I can go back a little bit. So here, that's okay. At the beginning, it would hit a low and then make a higher low. And then for some reason it started, oh, I think this was a higher, was this higher low? Here, let me see. Oops. That's a low. Yeah. So there's a higher low. And then we see another higher low. And while I was making a higher low, look, it was making higher highs too. Here, 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 and here, and here. For some reason, it stopped doing that. Now, it's doing the opposite. Here's a low, and it's getting a lower low. And then it's another lower low. And then it's getting another lower low. But on the upside, it's not making any higher highs. You know? Like, here's the last high that it had. So that's what I was talking about with that. Does that answer your question? Hello?
Yeah, that took care of it.
Okay, next question.
How do you use the SPY levels?
Okay, well, that's a good question. So what I do with the SPY levels is I have a model that kind of spits them out for me. And, well, the model does spit them out for me. And then basically what I do is I look at when it breaches a certain level, how much volume is it breaching it on? And then I look at that and I look at what else is going on in the market. Like, for example, when it hits 160, when it hits the 60 level, I'm like, how much volume did it get forced through on that 60? Was it a lot? You know, like here, let's just look at this. Where's the 5 minute? Maybe the 1 minute would be better. That's the other thing. I look constantly. I'm looking at different time frames constantly to see where we are. 5 minutes doesn't really do anything. Because it gives you a different picture, you know. But I mean, today's SPY had no volume. There's like nothing. It's like very low volume today. Yuck. But here's a good one, I guess. So you're looking here, right? And the volume on the down was much higher. You see that? On that downtick, it was really, really higher. And that, then people like bought that, and then they started to ride it up, and then when it came down, again, here comes that lower, that higher low, right? And so I just look at the price levels, and where are we at that price level? We're looking at the 150, 130, and I kind of use my levels with where the lows and the highs and the VWAP. I talk about the VWAP too. Like I look at where my levels are that I post versus where the high and the low and the VWAP are. And then I look at the volume and I look at the tape and I'm like, okay, is the tape confirming that we should get a little bit more, you know, we should get higher or lower here? Like today, was it today I said, hold on, was it today that I said that 151.60? We need to get through 151.60 to go higher. And here's a great example of the Twizzlers. Oh, look right here, look. That's consecutive, and that's three attempts. Look, 3 attempts to get over 151.85, and they all failed, right? And even here, now we have some tweezers here. This one's a toughie, though, because it's a little whatever. So I just use the levels. I mean, CP, you could talk about how you use the levels, because you're opposite. Like, you use my levels differently than I do. So can you chime in and say how you use them?
Sure. I like to look at the levels and then look at some of the key individual stocks that are maybe anticipating what the SPY is going to do at those levels. And then I'll use the levels as as basically support or resistance for an options trade, usually going the other direction. That way I'm getting the cheapest price that I can, and if it just moves a little bit further and breaks through that level, I know I can just cover and wait for the next level or see if it regains the level. But I tend to use it more like a guerrilla fighter, where I'm just trying to get behind a tree to take a shot. And the levels they're so accurate that you don't have to try every little tweezers that you see or every spike. If it's not near one of those levels, you just ignore it and you wait for a setup to come closer to one of the levels that, especially if I can identify which of the levels are even more significant, from Madison's perspective. Like there may be 3 or 4 different levels, but you'll notice sometimes she'll have ones that'll have she'll outline and say, 150.38. That is the nut. That's it. It's all about that today. Keep your eye on that. Well, then maybe the other levels aren't as significant. So try to get a position near there with an outcome that you think is will go your way. So I think I tended to watch them that way. You can also use the SPY levels failing or succeeding, and then run over to an individual stock that you think will follow the general market, and sometimes you can get that individual stock hasn't reacted yet, and so you can get a much better price or position, knowing that as the SPY follows through, it'll take that name with you. So that's another way that I try to position myself around it. But you'll notice from my posts, I'm mostly trading weekly options and over 1 or 2, maybe 3 days, but not as often swinging a longer position over weeks.
Well, that explains it, because I mean, CP has been with me for a long, long time. And am I speaking?
Yep.
So he's been with me for a long time, and I met CP on Twitter, actually. And I don't know, he was just like one of those little fussy followers of mine. You know, and he just kept on, you know, mentioning me and making me notice him. And then I don't know, we started following each other, and he started asking me a lot of questions personally in terms of the levels and how I was using them. And like I give him a lot of you know, I banter with him a lot, but he's spent the time to really understand the levels, and he uses them to apply to his stocks. And if you see the stocks other than Radio Shack, he plays very highly correlated stocks that run when the SPY runs.
Yeah, Radio Shack is an outlier.
Yeah, well, so is Sprint.
Okay.
You know, but we have a few of those once in a while. You know, but I think that he's really been able to capture that the levels. Like, he knows if we're not going to get through that 60 level or the 38 level or whatever level I'm highlighting for that day, he has a little bit of time to look at, and you probably look at VWAP and see where VWAP is.
Yep.
And where we are in terms of VWAP. And I don't know exactly what he's doing, but I'll say, okay, like, just instinctively I'll look at the volume and I'll be like, you know, this is going to be a hard level to get through. Or I'm like, this is a nut to crack, or this is a toughie. Like, that means that the volume is not confirming that that level is going to get broken through on the upside or on the downside. And when I say, and when I post, you know, 60 or 88, then that means that the volume's pretty equally distributed. Like, I don't see a ton of force taking it up higher, but I also don't see a lot of pressure on the downside. So it could go either way. And for me, as a day trader, if I was trading the SPY as a day trader and it couldn't crack the 60 level or say the 38 level, I would definitely try a long to see if it gets up to the next level, because you're looking at a good 30 cents you could scalp, because the levels are pretty, like, you know, from 38 to 68, that's you know, 30 cents you could scalp. And if the volume starts pouring in at that next level, it could shoot up higher. And when I was playing more on the short end, and I was using SPY as you know, for the hedge, or I was using the Qs, and once I saw SPY not being able to go through that level, I was hedging my shorts with the with a long on the Qs. I mean, the environment is different. So what I use to hedge is different. Like right now, I am more long this year than I was last year. Last year, I played a lot of short. You know, I had a lot of short positions on, and I played SPY a lot of the time short. And I would use the Qs to hedge the SPY short because I was trading more SPY. I didn't have as many positions in my trading account, like stock positions. So I was using SPY as in, like, I was pretty much net short SPY. And so when I couldn't, and I didn't really have anything to offset SPY, so I was using the Qs to hedge my SPY. But now I'm doing it opposite. Like, my positions, my long positions are like my Qs. And I'm using SPY to hedge my longs. Do you understand that?
And why would the triple Q? Is that just a typically weaker
No,
index?
because last year the Qs were the leaders.
Right.
Like right now we see the financials are the leaders. Last year tech was the leaders, and anytime Apple ripped, the market ripped, and there was a divergence between the Apple and the market once it, you know, it had the bad earnings thing. So even though Apple was getting crushed, we're seeing higher levels in SPY this year. That was not typical. Last year, Apple ripped, SPY ripped, right?
Yep. No, I
And
see
so
what
for
you're saying.
me, that's the cues. We're like, okay, Apple's going, Google's going, you know, and SPY is going to go with it. That's not the case now.
We're butting up on, well, we're over an hour and a half here. Maybe what we should do is wrap this up for tonight,
Okay.
and we can certainly hold more of these in the future. And I think we might even need to expand the subscription that I have right now with GoToMeeting so that we can accommodate more people. I think there was a few people that maybe weren't able to get in tonight. So we'll get the recording, we'll post that, and then we'll add some more.
Well, let me just finish this.
Sure.
I'm not going to go through each one of them,
Okay.
like the stops and all that stuff. But in terms of the thing that I use as risk management is, like, I obey my stops. Like I said with Coinstar, I obey that. I see where it's holding, and if it doesn't hold that, I get out. And in terms of profit taking, I cushion along the way. So I'm actually scaling out of my gains as we go. So unless unless I see something like LinkedIn, there was just so much force in LinkedIn to go higher, I didn't really feel that I had to take any cushion. Like, as soon as, sorry, I had dropped my mouse. So for me, I did take a little bit of cushion off before, you know, the earnings report, but I was just seeing a lot of good volume coming in to LinkedIn, which made me feel much more confident about going in it long. And I know the kind of volume that I should see in LinkedIn because I trade it all the time and I watch it all the time. So I was seeing, you know, there was definitely buying interest in that. So I do that. And in terms of the small losses, well, Coinstar should have been one of those, but it was an earnings thing, and I didn't have time to get out, so I had to make a decision what I should do. Should I manage the loss, or should I just take the loss? And like I said before, fundamentally, after I listened to the conference call, I realized that I made a boo-boo, and I should have played the earnings because I didn't know the stock, and I didn't define my risk. It was a gamble on short interest and a squeeze. And so then I had to say, okay, I really need to understand this company, and I need to see like what my risks are, because do I just flat out take the loss and be mad if it rebounds, or do I manage it? And that's why I listened to the conference call, and I liked what I heard, and I thought that there was a good chance that I just got in too soon, and it can go higher. Like if we bought it at that $46 or $47 level, like when I added, you guys would be up like $2 on it, you know. So I just got, I made a boo-boo, you know. And then again with the market condition, like right now, the only thing that I'm seeing is, and sounds just so typical, but the thing is, the only thing I'm seeing is that there's good price action in shorts and in longs, and it depends on the stock you select. The stocks that are getting beaten down continue to get beaten down, and the stocks that are coming out with, you know, good earnings and they're making higher highs, they're being rewarded. The thing is, like with Amazon, Amazon's one of those that it's kind of like in between. So you either have to believe in it and know where your stop is, like the 249.50, because that's where it went, or play it on the short side. You know, every time it revs and it can't get above 262 or 264, short it and see how far it goes. Because right now it's not really showing price action that's going to confirm that it can actually blow through 264 and close above 264. That's why I'm not adding. If I believed that it wasn't going to test that 249.50 level, I'd be adding. But I don't believe that. Like, I don't see it either. Like, I don't see it. And that goes to this trade what you see, not what you think. Like, I think it should be $300. I don't know why it's not at 300, you know, but that's not what I'm seeing. And I can trick myself and say, oh, you know, whatever, and I can tell you guys, oh, it's a long-term investment, and keep, you know, buying the dip, but that's not working. What's happening is shorting the rips are working, and if it can't get above, like, if I post like 264 or 262 or 260, just like today, Apple, you know, that 585 level. I mean, I knew that it was going to test it. I said 580s today. I mean, 480s. What am I thinking, 580s? I'm talking about when it was in the 600s now. But, like, I knew that that 480 was going to have, it had to, because of just the pre-market activity. It just looked like it wanted 480s today. And then I looked at the 485 level, and that was just like when I said, when it was trading at what was it? I don't remember. But when we caught it, I think it was the second. We caught it on the second, and it was like, hit like 438. Oh, it was a 442. So I wanted to test 442 or 445, and then it blew through that. And then I wanted to test 50s and 55s. Like the trend was up in Apple, right? And I saw that. That's why I wanted to increase my long exposure. Today, I'm playing it because I'm believing that that 485 level, just, it had a problem with it. Where's Apple? Here's Apple. You know, it hit 485, came back to test it. It couldn't. Then it made a little bit of a higher high, and it just boom, lower high, lower high, lower high, a little bit of a touch, lower high, way lower high. Then it kind of bounced, had a little bit of a low. Then it kind of bounced and I tried to test it. But look what happened. Look what happened. Where's my pen? Look what happened. It hit here, and it hit here, the same level. Couldn't go through it. And what happened? Zoom. But here was where it needed to do, right here. It needed to get this level. And it didn't do it. So that was a good thing, and that's why I said to you, the 482 level was important. So then, let me just get back here. And then, the way I do it is like, you look at your percentage of capital for your stops, you look at how big of a size you have, and I also look at the average trading range, the ATR, over the past 5 days to get a good idea of where my stops should be. And then, this is a good thing. When in doubt, stay out. Cash is a position. Yeah, when there's no setup, don't get involved. Anyway, that's all I really have to say.
We can make some portion of these slides as well available if that's something people would like to see. Don't you think?
Yeah. I mean, and my final thought is this. Like, I love what I do. I've done it. I'm really sorry. I'm a little bit tired because, you know, it's been a long day and I've traded and stuff. But I really love what I do. There's nothing else on this planet that I could possibly see myself doing. Nothing. And so what I believe is the quality of your P&L is in direct proportion to your commitment to excellence, passion, discipline, and dedication of whatever you decide to do. So if you really, really want to be a good trader and this is your passion, you can. I don't think that trading is that hard. I really don't. I think people overthink a lot. A lot of people overthink it. And, you know, I think that what I've seen in terms of when I've taught other people, the people that are the most successful are the people that can admit when they're wrong and they can take a loss. If you can't take a loss and you can't admit when you're wrong, then you're just going to get into a downward spiral of just, but it's going to go higher. Oh, it's going to do this. It's going to do that. You know, like today, honestly, I swear to goodness, if Coinstar did not get above, sorry, I'm just listening to what Jag says. It's okay to be wrong. It's not okay to stay wrong. Exactly. Exactly. Good point. But honestly, I swear to goodness, if Coinstar would not have gotten to the 49 level today, I would have been out. Because to me, it's just like, okay, that was the level I was looking for today. And I wanted to see that it got to 49. And I want to see how it went. And then it flew through 49. Now it's at 49.30. So what do I want to see tomorrow on Coinstar? I want to see it, like, get up and go. Like, it needs to get up and go. You know, look at that. It's a pretty nice looking chart, don't you think? Here we go. It's like the low is 47.97. So tomorrow I'll be looking whether or not it can, like, violate that. I don't think it should. I don't even think it should go, like, this low. I mean, I would think that 48.60 should hold tomorrow. You know? I mean, we're way up there. In fact, I would hope that it would hold like this 48.80 level. Look at how many twice it tried to get through. Look at that. See? Hold on that. Hold on.